When you take estimates from the beginning of the year on earnings down 7.5%, and then you beat them, that's basically just crossing over a much lower bar. What hasn't changed is that the year-over-year trend, even with today's numbers, are still negative. So you cut your estimates, and then you beat your estimates, and then there's this kumbaya moment that we've had not just today, but in the past several weeks. The trend in earnings is actually still negative for the first quarter. And we'll see what the outlook is for the balance of the year. Your comment on the economy, actually, I'm taking a look at the fact that real retail sales, we got the numbers for March. Real retail sales were actually negative in the first quarter. Real retail sales were negative in the fourth quarter. And when you have back-to-back negative real retail sales, you're actually heading in a recession over 80% of the time. We're going to find out on Friday. The key number I think people should focus on Friday is not GDP, but the real underbelly to the private sector. So real private final sales is going to be very important to look at. And so, you're commenting on how great the U.S. economy is. I looked at the Citigroup Surprise Index. It's at a 22-month low as we sit. The global Citigroup Surprise Index on the economy is at a 70-month low. So I would actually disagree that what's happening with the equity market right now has really anything to do with the economy. It continues to be the fact that interest rates are benign, the Fed is out of the picture, and you have liquidity and momentum really battling valuations, and what I still see as an earnings picture, not benchmarked against expectations, but actually hard earnings that I think are still going to be challenged into the balance of the year.
But that wasn't really Sarah's point, and nor did she say that the data on the economy had been outstanding, just that the last couple of weeks it has seemingly turned a corner again and been less bad than previously expected. Would you admit that that is the case, that things have prolonged for more than you expected, and therefore perhaps your thesis could be wrong?
Well, I'm pretty sure that Sarah had said that the economy had been doing better against expectations.
Well, David, the 10-year yield has moved from 230s to almost 260. The odds of a Fed rate hike were almost priced in by the end of the year. That's also been priced out. The Atlanta GDP estimate has gone from 0.2% in mid-March to almost 3% for the first quarter. The data has come in a little bit better.
Well, if you look at the New York Fed's estimate for the first quarter, it still has a one handle. And there's a very big range on the estimates for the first quarter. But the data have been mixed. I mean, you had a good new home sale number today. We just came off a horrendous existing home sale number